Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Thanks for having me back, Jim, and thanks for doing the show while you still sound like you're a little bit under the weather.
Oh, of course. Viruses love me. They're my pets. The Federal Court of Appeal upheld a previous ruling that the Toronto Real Estate Board, and by extension every other real estate board in the nation, must allow its members to freely publish consumer-friendly stats and related data. Are the real estate boards likely to comply, or are they going to take this fight for disclosure to the Supreme Court of Canada?
Well, I'll tell you what, Jim. I was requested interviews on this one starting last Thursday, and I declined them all. The reason I declined them is that I cannot explain the magnitude and the amount of information that is required to be understood about this topic in a soundbite. So I saved it all for the show here today on Howe Street, knowing full well that you're going to ask me this question. And the question you asked actually has so many different components to it that a really quick answer will probably be a little bit more difficult. But as you know, I like to talk. The Federal Court of Appeal upheld the previous ruling that the Toronto Real Estate Board must allow its members to freely publish consumer-friendly information, consumer-friendly stats. The first of all your listeners should understand is that depending on the province that a real estate licensee is licensed with, what they can and they cannot release to the public is determined by the Provincial Trading Act. Now, what I mean by that is this. In Ontario, it doesn't matter what the Competition Bureau says. The Competition Bureau is not the boss of real estate agents in Ontario. The boss of real estate agents in Ontario is the Real Estate Council of Ontario. The same way in British Columbia, it's the Real Estate Council of British Columbia. In Ontario, the Real Estate Council of Ontario administers REBA, the Real Estate and Business Brokers Act, which was last updated in 2002 and which will be updated again early 2018. The same way that your real estate terms are being changed out in British Columbia. What the Real Estate Council of Ontario has told members of organized real estate, people who have a real estate license, the only people who legally have access to MLS data, is that they cannot release sold information to the public. They have not been able to do that forever. Not because the real estate board says no, but because the provincial regulator has said no. Now, the provincial regulator has to look at privacy. They have to look at consumer rights. They have to look at the Real Estate Trading Act. They have to look at a whole series of factors before they can give instructions to their members. Those instructions the members must follow. In Ontario, there was a realtor who a couple of years ago, 2015, decided they were going to publish a sold price for one single transaction. Those home buyers found out that that information was published, and they issued a complaint to the Real Estate Council of Ontario. The Real Estate Council of Ontario investigated and found out that the real estate agents did not have the written permission of both the buyer and the seller to release that information to the public. What ended up happening was there was a $8,000 fine levied against that real estate agent. There is no bypassing provincial trading regulations. The Competition Bureau is ignorant to how the housing infrastructure in Canada operates. I watched the Competition Bureau in newscasts, And I couldn't believe the degree of incompetence that they were spouting in these shows, telling people all these stories. What they basically did, Jim, they reiterated what third-party tech companies' talking points are. The Competition Bureau actually believed that this is going to improve competition. This is going to reduce fees. This information the public has a right to. Now, understanding, in the province of Ontario, there's what's called the $1realtor.ca. So your listeners are welcome to go on the internet and check out $1realtor.ca. Any person, homeowner in Ontario, can list their property for $1 total commission. Total commission. The seller will pay $1 to list their property. That property will have the best marketing materials in North America delivered to it free of charge for that $1 cost. The Competition Bureau believes this is going to increase competition. You can already sell your house for $1. What are they talking about? They're believing these new entrants into the market these people have never sold 1,000 or a couple thousand homes. They have no idea what they're talking about. They're so underskilled, so inexperienced, so incompetent. They actually think the only way they're going to be able to make money through having a real estate license is if they get sold data. And they can convince every person out there that it's important for everybody to have free access to what your house sold for. That's what they actually believe. Now, meanwhile, in the United States, a huge multi-billion-dollar corporation called Zillow can't make a buck, and they have access to their sold data. The real estate companies that have launched in the United States cannot make $1 because you don't make money that way in real estate. I'm not saying they should make the money that they're making. I'm not saying they should make any money at all. I'm just saying for a real estate brokerage to think they're going to start offer a new competitive idea, they're dreaming. If there's anything about real estate, it is the singular most competitive business in the world. In my hometown of Burlington, when I was selling, there's a grand total of about 60,000 homes that exist. There were 2,500 real estate agents fighting for that business. Find me another competitive business model like that. It doesn't exist, which is one of the reasons you have the problems we have today, because it is so competitive. But the Competition Bureau was wrong. They believed that they can take there's so many levels here, Tim. So many levels. And the real estate boards themselves are incompetent, and their staff are incompetent because those staffs didn't give their lawyers the right ammunition to take into this decision with the Competition Bureau. A, copyrights. When a real estate salesperson draws up a listing, they measure all the rooms, they go do research on the property, they take photographs of the property, they create a market value assessment or an opinion of value, which is their own work, and the real estate agent owns that copyrighted material in the same way that any journalist who writes and publishes an article in the newspaper owns that, or in the same way that any home inspector who does a home inspection owns their home inspection, or the same way that how any appraiser who appraises a property owns the copyright on that appraisal. This discussion didn't even take place with the Competition Bureau because the real estate board's incompetence, no other reason. So, is it likely the real estate board is going to comply with this decision? The Corporations Act in Canada states that a corporation must follow the bylaws and the articles of incorporation, which for the Toronto Real Estate Board means they must represent their members' best interests. The board of directors of the Toronto Real Estate Board has no choice but to appeal this. If they didn't appeal it, they would be open to a lawsuit by any of the members of the real estate board who found that the board of directors was not complying with the Corporations Act. All of the lawyers at the Toronto Real Estate Board have on staff. They're going to be telling the board of directors this right now as I'm talking to you on the radio show. So there is no way that the real estate board of directors could go ahead and accept this decision. They have to file an leave to appeal. They have to try to appeal it to the Supreme Court. Now, when they go to the Supreme Court probably for the first time, they will call the Real Estate Council of Ontario as a witness, which for whatever reason the Toronto Real Estate Board has not done until this time. If the Real Estate Council of Ontario is called, the Real Estate Council of Ontario will have to explain in a court of law that under provincial trading laws, it is illegal for a sales representative to release sold prices. That's going to change the whole issue. They will have copyright experts in there. Because copyright law, as you know, Jim, is some of the most tested laws in the country, some of the oldest. And the copyright experts will explain, well, if Ross's father created listings in the 1990s and he sent them into the Toronto Real Estate Board under a copyright agreement that both he and the Toronto Real Estate Board signed, the Toronto Real Estate Board just can't take the advice of the Competition Bureau and throw away Ross's father's copyrights. So the Toronto Real Estate Board, if they were to accept this ruling, would automatically open themselves to a class action lawsuit from every single person who posted a listing on the Toronto Real Estate Board who are not willing to give up their copyrights. That wasn't discussed in the court decision. I can go on and on about this for 2 or 3 hours, Jim, and I know that the listeners are asking, but Ross, you tell us, we don't have the right real estate data. We need more information. Why can't we know what the sold prices are? And the answer to that is really quite simple. A, if you really want to know what the selling prices of houses around a house that you want to buy or around your own house are, you can go to the land titles office and you can purchase that information and you can make your own decision. That information has been available for decades to anybody who wants to simply go down and get it. It's not complicated. On the other side, it would be ludicrous for any home buyer or home seller to agree to allow that information to release to the public. Because I know what I can do with that information. What I can do is I can look at the selling price of a property. I can look at the purchase price of the property. I can calculate the mortgage that was taken out on the property. I can look at the length of time they've owned the property. I can look at any improvements that they've made to the property, how the market is evolved since they've owned the property, and I can calculate what their net worth is. What this lawsuit basically is saying is, we are going to, as a nation, give permission to banks, insurance companies, Revenue Canada, everybody in the world to have access to the net worth based on home equity that Canadian homeowners hold. That is absurd. We would not give people open access to our tax forms, the world. You wouldn't give all your neighbors your T4. You wouldn't give all your neighbors your stocks that you own. Your listeners need to understand. Canadians' net worth is dominated by homeownership wealth. It's probably right now around 65% of the total net wealth of this country sits in residential homes. That knowledge, the ability to calculate someone's net worth, is so intrusive to you as a person. It's just unbelievable that this discussion is even taking place. Now, is there a way around this where the public can have access to real estate market trends without having to subscribe to the wealthy homeowner, or going down to the land titles office, or hoping that the real estate agent will give them all of the information that they have, or without hiring an appraiser? Yes, there are ways that trends could be released to the public, but what I'll tell you is this. There is universal ignorance on how housing markets function, as we've said in your show over and over again. The ignorance is displayed in the court filings over this Competition Bureau versus TREB. I can go through every single one of those court filings with a lawyer and an accountant on my back to check and see if I'm saying the truth or not, and I can destroy every single one of those filings. They're ludicrous. They're nonsense. They're BS. They're written by someone who thinks they can make a buck off of this. It's not being done for the public's interest. If your listeners believe the Canadian government should have access to being able to calculate the net worth of every citizen in Canada, tax-free net worth, remember, there's no capital gains in your residential real estate. You do not pay tax on residential real estate, income tax, like you do on your stock portfolio or the interest that you make in the bank. This is the one right Canadians have always had. It's the one way that we've always been able to make ourselves richer as a nation. If you think that the government has a right to gain that information, because that's the only purpose this decision serves. Everyone is ignorant to how a housing market functions. We are writing a book right now called Mathtown versus Statsville. And it's two towns where one mathematicians and engineers live in, called Mathtown, and one where everybody else lives in. The difference between the two towns is in Mathtown there's no real estate agents. In Statsville there's real estate agents. And the two worlds of those two towns, it's a totally different reality, even though on the ground things are exactly the same. When you understand the ignorance that exists on housing markets and housing, only then can you understand how risky this court decision is, and why I do not believe any rational person, provided the facts, who currently owns a home in Canada or eventually plans to own a home in Canada, would be willing to accept.
We'll have more with Ross Kay right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're chatting with Ross Kay. Ross, governments continue to try to regulate the Vancouver real estate market. Could this make the downside of the market even greater?
Government's intervention into a housing market mid-cycle, which is the trading cycle, and government interactions at the wrong times are always going to have a negative consequence on the market. Whether that causes prices to have house price illusion to be magnified, as you're having in Vancouver right now, or house price net worth destruction because of changes to to rules as the market rolls forward? Yes. A simple answer is, when a government interacts with the market, could a housing market, the downside be greater? Yes. In the same way that the upside was greater. The government caused this upside because the government wasn't prepared for how the housing market naturally responded to impacts that took place on that market. You have to understand, like in Vancouver, it's not foreign buyers that are the problem. It's foreign ownership that is the problem. You don't hear a politician in Vancouver talking about what percentage of the Vancouver housing stock is owned by non-Canadians. You don't hear those words come out of anyone's mouth because they're ignorant to how a housing market functions. They wouldn't even think about it unless they listened to this show, because if they did, clearly someone would do a calculation. Whether it's the opposition looking to get political gain or the party in power looking to maintain political gain, somebody would be calculating that number. But it's not done. What we have here is we have two sets of new mortgage rules. One set of rules is already impacted the market. The rules that were brought in last November for first-time buyers. The OSFI happened to institute that rule at the right time. Simply luck. It was simple luck that they instituted the rule at that time. The reason why it was good is because it stopped first-time buyers from going out and buying overpriced real estate at peak price. People don't understand. The CMHC, plus Genworth, plus Guarantee, the three bodies in Canada who issue mortgage default insurance on high-ratio loans, all have watched their market shares, the number of loans that they've issued on high-ratio loans, plummet. And they don't know why. They have come up with all kinds of crazy answers instead of the most logical one. First-time buyers had quit buying. And those first-time buyers that are still buying, they're the ones who make a higher income. So they're actually buying more expensive homes. And when I was preparing for today's show today, Jim, this is no more true anywhere in Canada than what you're watching going on in the greater Vancouver area today. Because when we look at your market, we say to ourselves, okay, there were 60% more single detached homes sold in November of 2015 by the Real Estate Board of Greater Vancouver than there were this year, this November. 60% more single detached homes. The market has slowed down that drastically. Yet, it's showing on the benchmark prices are still supposedly up 0.6%. What is the real estate board saying? Are they really saying that home buyers are this stupid? That the market is was 60% busier 2 years ago, and we're still going to pay a higher price this year than we did last? Of course not. People aren't that stupid. What happens is the low segment of the market either quits buying or they move to another location. And the beautiful thing about this November's numbers are, Jim, your listeners who don't want to believe me can go out and check on their own. If they look at the Greater Vancouver Real Estate Board's entire average, so for the entire average back in November of 2015, the average selling price of a detached home, which we call the average purchase price, was approximately $1.5 million. $1.5 million. Now, if you look at where those buyers of those houses have gone this year They've gone out to South Surrey, White Rock, where the benchmark price has increased to $1.5 million. Oh, Ross, that's just a coincidence. All of those Vancouver buyers, that's not how it works. You're just picking out one thing. Okay, let's look at townhouses. Back in 2015, all of the townhouses that sold by members of the Real Estate Board of Greater Vancouver in November of 2015, the attached properties, they're called, the average was $630,000. Well, I wonder what's happening out in South Surrey, White Rock in 2017, 2 years later. Oh, magically, the benchmark price is $640,000. Virtually identical. Oh, this can't be true, Ross. This can't be true. People, housing markets function all in the exact same way. They do not change. They do not alter. The path is inevitable. It's why we time the market. It's why it's impossible for us to be wrong. If we look at apartments in all of Greater Vancouver, way back in November of 2015, just before the market plateaued, remember, in July of 2016, which was March of 2016, which we told in the show here, just before the foreign buyer tax was applied in July, which we told everybody, that's got nothing to do with why the housing market corrected the way that it did. Well, that $500,000 is in South Surrey, you're paying $480,000 for an apartment in 2017. 3 different categories of homes moving to one of the closest alternative markets outside of what is called the Greater Vancouver, or the Real Estate Board of Greater Vancouver's trading area, into the Real Estate Board of Fraser Valley's trading area. Those 3 prices are identical. Why? Because home buyers determine prices. It's a metric on how much a home buyer can afford to pay. If you can no longer purchase a property in Vancouver, but you want a detached home, and that $1.5 million that you're going to spend in Vancouver doesn't work anymore, you move out of the market further away from Vancouver till you get to South Surrey, White Rock, and now you're spending your $1.5 million. Now, do I think that's the right thing to do? Do I think you should be spending $480,000 for an apartment in South Surrey, White Rock? No, I don't. Okay? No, I don't. Because what I'm telling you is, this is simple real estate math. The real estate math going forward does not work. That is why you have a house price correction. It's why housing prices are dropping in Vancouver while the real estate boards are telling you the benchmark prices are going up. No, it's a different category of buyers. And what stymies me, Jim, is that the CMHC released their mortgage data just this week, and it 100% corroborates what I'm saying. There is 100% correlation. Obviously, if fewer first-time buyers are part of your sales mix, the average selling price goes up. Because the benchmark prices are based on average selling prices, they go up too. It's not complicated. So, the question that we started out with, can governments continue to try to regulate the real estate market? Can they make the downside risk even greater? Obviously. Real estate math cannot be avoided, people. You cannot avoid real estate math. The only reason houses are still selling in Vancouver is called the home equity pyramid. If I made $800,000 on my townhouse, I can afford to take a $600,000 mortgage and buy a detached house in South Surrey. That's how it works, folks. This is unavoidable. It works like this every time. It's why they call it the property ladder. It's why you work your way up the property ladder. The only way you can work your way up is A, by paying down your mortgage, B, by your house increasing in value. That allows you to get more leverage on your next purchase. Those are the two realities. Interest rates are no longer declining. That means the amount of mortgage that you can get will be less. It is staggering the amount of mortgage that you can get that will be less. It will have unintended consequences on housing markets across Canada.
We'll have more with Ross Kay right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Ross Kay. Ross, do real estate markets correct to where the average household income can afford an average home? And to meet that criteria, with an average household income of $80,000, Vancouver prices would have to correct about 70%, and that's without taking interest rates rising into account.
Okay, so good question, because it's home ownership math. Yet the question, whoever wrote the question, it's filled with myth. So your listeners should understand this. The average household, the family who earns the average household income never spends an amount equal to what the average home is worth. Never happens. Never will. It's not going to. Income and home prices are correlated in a certain manner, but not the way that everybody thinks. And I'm going to go back to what we discussed in the previous session called the property ladder. The property ladder is unavoidable. Unless you win the lottery in one form or another, every single Canadian family follows the property ladder the exact same way as they have for generations. There is no way of avoiding that property ladder. The market conditions that exist dictate how big of a step you can take in the property ladder or how small of a step you can take. Average household income, or median household income, which is what most economists use in their affordability calculations, are never the families who are going to be purchasing the average price home, in other words, what the average home buyer is paying, and then finance the property. It isn't going to happen. The average home is usually about a 2.3 purchase. So in other words, you'll own one home, you'll own two homes, and about the 2.3, which is we look at all of the housing stock in Canada, at about 2.3, that's where the average home is. That average price moves up and down in a trading cycle depending on where the concentration of buyers is buying at any moment in time. Any given quarter, to be quite honest with you. And quarters are not calculated on a calendar year quarter. But anyways, that's another point. So when people ask the question, or you see these affordability calculators by the Royal Bank, Bank of Nova Scotia, the Taxpayers Federation, all of these economists who use these exact same methodology for their affordability, it's just another crazy thing that's out there. Because they don't understand how the property ladder is navigated by Canadians. It's sort of like this, Jim. People think you can use an affordability calculation with average median price and median income in Vancouver to compare Vancouver to Seattle. They really believe this. Economists, governments, politicians, they all believe this. And I can shoot them down with one simple comment. The median income in Seattle for a family is not available income for home ownership. Because in Seattle, you're probably going to have to spend somewheres around $12,000 a year for a family of 4 for health insurance. And in Canada, you don't. That $12,000 a year is going to equate to about $300,000 of mortgage. So the Vancouver, the family in Vancouver earning a median income, the exact same median income as they would have earned in Seattle, can afford to spend $300,000 more on a house than you can in Seattle. The result of that is houses are cheaper in Seattle. It's the same as property tax. Down in the States, 2% property tax is very common. So if my house is worth $100,000, I should expect to pay $2,000 a year in property tax. Okay, in Vancouver, it's what 0.5? It's basically a quarter of what it is in some of the United American states. So that differential allows me to carry more mortgage again, and still be spending the exact same amount of my income as the person in the United States is who owns a home, in terms of mortgage, taxes, health insurance. Now, we also have income taxes to take into consideration, because these calculations are all pre-tax income. And those things vary widely from nation to nation. And in Canada, they vary widely from province to province. In Toronto, we have municipal land transfer tax. So a home buyer has to add that added expense into their mortgage, and that has to be part of the calculations. There are literally about a dozen common, unique variables in any housing market that dictates how much income an average family can spend in a house. Then you have to look at where is the average homeowner in terms of the property ladder. Where are they right now? And how long have they been there? Because that's going to dictate how much equity they have in their home and how much mortgage they have. Then you can determine how much more house they can buy on the next trade. And that dictates where the average selling price is over time. It's why all of these benchmarks, all of these averages were created by real estate agents who live in Staatsville. Because if you didn't live in Staatsville and you understand that home prices only increase based on the real change in value that has been ongoing for the last 100 years in Canada, you would never deal with a real estate agent. You would simply go out to your neighbor and you would say, okay, your house was worth this year. We know your house has gone up, should have gone up another this % this year. I'll give you that much now. You wouldn't need real estate agents for that. But you need real estate agents because of the illusion they've created over the last 70 years. Your listeners need to understand this. Organized real estate has controlled the conversation of housing for over 70 years, since the 1940s. Up until about 1985, that conversation was legitimate. They were honest. They released statistics in a way that a layperson could kind of make a rational decision. For the last 35 years, that has all changed. Now we all live in Staatsville. Economists live in Staatsville. The banks live in Staatsville. The government lives in Staatsville. The entire world believes the world is flat. If you were to ask a real estate agent, we're talking about that kind of a comparison, Jim. When we talk about the housing market, it's like saying the world is flat. What is believed? People believe everything that has been published about real estate that has come from organized real estate. Everything. They believe everything. It's like the world's flat. Someone has to pull back this veil and show people the truth. Hopefully, Mathtown versus Staatsville will do that. In the meantime, the question that was asked, can the average household income afford the average home? Never has, never will. The average household income generally is going to be a second-tier home, which could, in Vancouver right now, is a traded condo. You bought a condo, the first condo, now you buy your next condo. If you live in Vancouver, that's what you are. If you want to move out to South Surrey, then it's going to be a townhouse. If you want to move out to Langley, it's going to be even more. That's the way that people move up the property ladder. And then as they get wealth, they move back in closer to the city. This is what's happened in Toronto. People say, well, how can people afford a house in Toronto? Well, 30 years ago, those families moved out to Oakville, and they bought a condominium. Then they moved to Mississauga and bought a townhouse. Now they're moving to Toronto and buying a detached house. That's how you move up the property ladder, folks. And you can believe whatever you want from whoever else is out there talking. What I can tell you is 100 years of real estate data proves otherwise. The property ladder is navigated the same way by everybody. The way that you're going to do it if you're a millennial is the exact same way your parents did it. The environment that you're doing it in will change. In other words, your parents experienced declining interest rate environment for the last 35 years, while you're probably going to experience an increasing real estate environment, interest rate environment for the next 25 years. So your calculations all change. Your expectations on the market should all change. It's simple real estate math. There is no avoiding the math, Jim.
Ross, thank you so much for chatting with us.
Thanks a lot, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HoweStreet.com radio. Our popular YouTube channel is Talk Digital Network. You can find us on Twitter at HoweStreet. Questions for the show can be sent to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.